Good afternoon. Welcome to the FTD University webinar titled Payroll, Scheduling for Profit. Today, you will learn how to schedule your staff to meet your business needs while achieving your cost targets and turning a good profit. This webinar will show you how to determine the number of man-hours of labor that you need each week, day, and hour. Derrick Myers, a certified public accountant and certified financial planner and president of Crockett, Myers & Associates, will be leading this informative webinar. As a business consultant, Derrick has developed financial strategies that are unique in the floral industry and have proven instrumental in the growth of many florists. While working with the floral industry since 1983, Derrick has perfected his floral analysis program, which allows him to break down financial statements to show owners where to focus their time and energy to reduce costs and increase profits. He also provides the expertise to guide businesses and individuals toward their financial goals through management advisory services, as well as tax, estate, and financial planning. Once Derrick is finished with his presentation, we will open the webinar up for questions. If you have a question, simply type it in the question box on the upper right side of your screen, and feel free to submit questions during the presentation, and we'll be happy to take them at that point. So without further ado, I would like to turn the call over to Derrick to begin the webinar. Derrick?
Welcome, everybody. First thing I want to do is congratulate all of you for attending this. You know, only the top 10% of any field actually take the time to further their education and get better at what they do. So just the effort that you're putting in to attend a seminar like this, makes you stand out, makes you different from everyone else. So I congratulate you for that. And hopefully it'll be worth your time and we can actually show you how to maybe save some money and make a little bit more as you go forward in this. Again, my name is Derrick Myers. I am an accountant, although I try not to say that when I'm with florists because they tend to hide and run from accountants. So I'm usually in disguise. So if you ever see me, I'm in a Hawaiian shirt all the time. I'm the guy in the Hawaiian shirt. So I stay in disguise all the time. But we're going to be talking about payroll today. Payroll is one of the three big areas that as business owners, especially florists, we have to really concentrate and make sure that we're controlling our costs. Cost of goods is probably number one. Payroll is, I would say, number two. And then delivery is number three. So those are the three big areas that we usually focus on when we're looking at a florist. So first thing I want to do is recap the session that we did a couple of months ago. So we did part one of this, which was all on targets and incentives and things like that. So I just want to recap a couple quick targets that we're going to be using today in this session that we did from the last session. So first of all, I want to look at payroll in general and what goes on with payroll. One of the first areas we've got to kind of eliminate for right now is officer and owner payroll. The reason I say eliminate it is officers and owners payroll is very subjective and it changes greatly depending on the type of entity that we're dealing with. So if we're S corporations, for example, we're going to tend to keep officers payroll to a minimum and then take distributions so that we can save some Social Security and Medicare taxes and not pay as much in taxes. If we're a regular corporation or a C corporation, we're going to be taking more payroll because we don't want to pay taxes at a corporate level and a personal level. So we take it all out as payroll to avoid the double taxation at the corporate level. And that can swing owners' compensation anywhere from like 5 to 15%. It can be anywhere in between. We typically target a 10% target for owner salaries, but again, for S Corps, I know it's going to be lower than that. For C Corps, it's probably going to be higher than that. But I just wanted to separate that from the rest of the payroll, but that's kind of why. It's too variable. Now, anytime we're looking at percentages, we've got to know what we're looking at and what the percentages are and where they're coming from. So the first thing we want to know is what our percentages really are. Now, the way we're calculating them here today, we're using gross payroll dollars as the numerator. And that does not include any of the taxes or the benefits. This is strictly the payroll. And we don't include benefits because, again, benefits can vary greatly. Some shops might have pension plans and health insurance and all these other benefits where another shop might not. So in order to make the payroll comparable, we want to go back to the raw payroll and look at those percentages. We can look at benefits as a separate calculation, and we do when we're analyzing companies. So we look at benefits as a separate factor. So gross payroll dollars is going to be our numerator. Our denominator is going to be inventory sales, and that's going to give you the percentage. Now, for those of you that don't know who I am, before I go into this next little discussion, let me tell you a little bit about who I am. I am an accountant like most other accountants. And I started with my first florist back in 1983. And back then, I picked up my first florist, and they started asking me questions about their wire service expenses, and this commission goes here and that commission goes there, and it's getting all split all over the place. And I kind of looked at them like, like a deer in the headlights, kind of like the look I usually get when I'm talking numbers to a florist. And I basically said, what are you talking about? Is there anywhere I can learn to account properly for this? And they said, well, yeah, our other accountant didn't know how to do it, but it just so happens FTD is having this class. And back in the 80s and early 90s, they had classes called Advanced Master Florist Managers classes. And my partner and I said, well, why don't we go to this one? The first topic was on proper accounting for wire services. So we thought, this is perfect, we'll go. And our florist was a little shocked that we were willing to take the time. And we went with them. And we were sitting in the class, and of course, everybody's introducing themselves. And hey, I'm Bob from Bob's Florist, and I'm so-and-so from such and such florist. And my partner and I go, yeah, we're Derrick and Dave, we're accountants. And we kind of got this look, this double take, like, what are you guys doing here? And basically, we said, well, we got this account as florist, and we don't understand how to do the wire accounting. We just wanted to come here and learn how to do it. And they said, well, our accountant doesn't understand it either. And I wish I could say right at that moment, it just like, hit me that, hey, I've found my niche, but no, I wasn't that intelligent. So we started going, we went through all the classes, and I think, if I recall right, it was either 2 or 4 years. We went every quarter for like 2 days. And when we got done, we were advanced master florist managers, and we also had 10 florists as clients. So just by going through there, we met and picked up 10 floral clients. And we continued to work with our florists and get better and better and understand more and more of the business until we had about 20 or 25 or so. And then we decided we wanted to market to them. And that's really when we found out how little we knew about florists. So we went to one of the FTD conventions and set up a booth, and no one would even look at us. So we finally figured out that if you set up a tiki hut and serve drinks to florists, they will come talk to you. And we got to talk to a bunch of florists. And that's pretty much how we got in this. So we now work with 126 florists on a regular basis. Most of them are monthly. And that's where we're pulling most of our numbers from. So we have 126 florists in 37 states, I believe it is now. And so we're pretty much nationwide. A few of the flyover states we don't have yet, but we're working on those. So that's kind of how we got started in the business, and that's who we are. So the tiki hut, the Hawaiian shirts, I'm in disguise all the time. That's how all that got started. So one of the first things that we started realizing is every time we picked up a florist, they were dealing with gross sales. And we found that more valuable to use inventory sales. So I just want to show you the difference of what we're talking about. So gross sales are typically what I see on most florist financial statements or profit and loss statements. So basically, it shows, what we sold in cash, what we sold in checks and AR, our wire in sales. It has our delivery income and our service and relay charges and all of our other income. Everything's listed like right in one section called sales. And although this is good information, it doesn't give us what we need to analyze the business. So what we do is we break them down differently. We use inventory sales. And inventory sales, we want to know, instead of how you sold it or how it was paid for, we want to know what you sold. So inventory sales look at fresh flower sales versus plant sales and balloon sales and so on. This gives us something that was very tangible that now we can compare fresh flower cost to fresh flower sales and make sure that we're in line. Okay. So inventory sales are what we use for all of our percentages. So anytime you get a percentage from Crockett and Myers, it's going to be based on inventory sales. So it's real important because if you try to use our percentage and you're using gross sales, you're going to have a lot more, you're going to have higher gross sales, which means the percentages are going to look smaller. So if you're using inventory sales, that gives you a truer picture of what your costs are as opposed to gross sales. The other stuff, the delivery, the service, the relay charges, all that stuff, that goes down to the bottom of the financial statement for us. It's called other income, and we stick it down the bottom. So that's just the difference in what we do. So when we're talking about all these percentages, just remember they're percentages of inventory sales or product sales or merchandise sales, whatever your system, whatever your POS system calls them. It doesn't include the delivery and the service and all the other income. Okay? And like I said, it's very important. So now let's talk about some payroll targets. So when we're talking payroll targets, the most important to me is what I call the rank and file. These are the people who do it for us. These are the people who get the work done, make the product, get it delivered. They make the sales, they make the product, they get it delivered. It's the processing part of the business. So the first section of that, of course, designers are the largest part of this. And for most of our florists that we work with, these percentages hold very, very true. As some shops will have a little bit of a different diversity between designers and salespeople, but for the most part, these hold very well. So designers, we run 15%, delivery drivers at 5%, and then our sales and admin staff, so if you have any bookkeepers or admin people, plus your salespeople, they should run about 5% as well. So if you add all that up, it's 25% is what we have for our target payroll. So I've heard a lot of people say, well, payroll should be 30% or 33% or whatever the numbers are. We target 25% for our rank and file. Now, again, that does not include our officers. Okay, we excluded them earlier. Now they're typically about 10%. So that would put us at 35 combined. Right? But again, we're going to focus on this 25 for right now. Right? Now, these targets do include subcontract and casual labor. So if you bring contractors in for the holiday time and to do delivery, well, they're part of that 5% delivery income, okay? So we count all of that in. It's all labor, not just payroll in that case. So that's pretty much our overall targets that we're going to be working with. And that's kind of a recap of some of the targets we talked about at the last part of the seminar, or last, the first part. So now we're going to talk about scheduling for profits. And scheduling is probably one of the most important things that florists need to do, and they probably spend the least amount of time on it. So it really is where you're going to turn around and make the business profitable. By controlling it at the scheduling level, you're going to make the profits that you want to make. So let's talk about scheduling by the numbers and how we do it. Right. So the first thing we have to do when we're looking at scheduling is we've got to determine what the projected sales are going to be for that pay period. So if we're looking at a week, we want to know what the sales are going to be for that week. Now, the best way to do that is go back and look at your history. And maybe you go back and look at a couple of years for the same week. And we want to build up that history. We want to get an idea of, hey, sales are this amount for this week. And maybe they vary a little bit. Maybe they're going up and down a little bit. So we want to pick what we think is a good average for that period. We also want to look at, hey, did we have any events or weddings or anything, in one of the weeks that may have messed it up, and we've got to, adjust for that to try to get it to be more stable, because we want to look at what repeats and not things that are not repeating. And then, of course, the last thing we need to consider is what is the trend for the current year? Are we up 10% over last year? Are we down? Where do we think business is going to be this particular week? So using that information, we can come up with a number, and we say, okay, looks like sales are going to be about 14,000 for the week. Okay? Now we want to break that down by day. And again, we want to do the same thing. We want to go back and look at it per day and figure out what the sales were each day. Once we have that information, now we're armed with to build a schedule we're gonna have the right amount of people in it. Okay, so once we have that information, what do we do next? So here's the next step. The next step is to take that sales number, and we're going to use our target categories that we just talked about, the 25% that we just broke down between 15, 5, and 5. And we're going to multiply our projected sales by each of those category targets. So if we're doing $2,000 in sales for the day, and we have a 15% target for design, well, that's going to be $300 that we have to spend that day on designer labor. Okay, so just by multiplying the sales times the target percentage, that gives us the dollar amount that we have to spend on that particular category for that day or week or whatever period we're looking at. Okay. The next thing we need to do is take that take that dollar amount, that $300 that we now have available for our designers, and we need to divide that by our average pay rate for our designers to find out how many hours we actually have available. So if we're at $300, and we divide that by 15, say an average of $15 an hour, we have 20 hours available to us. Okay, so we can budget in that day 20 hours worth of design labor. Okay, so that's the formula we want to use. Now we can even look at it even more detailed than that. We can look at, hey, we can say, look, between 10 and 1, that's when most of my designs are getting done. That's when I need more payroll. So I need to put most of that 20 hours up in that time frame. So we need to look at it even more closely than by day. All right. Now, so once we have our numbers and we know how many hours we can now schedule, so we know we're doing $2,000 today. That means we got $300 in design labor. It means we got 20 hours in design labor at an average of $15 per hour. So now what we want to do is first schedule in our full-time employees. Okay? So if we put our full-time employees into our schedule, and then we subtract those from our available hours and we see what's left. Okay? Hopefully we have some left. Hopefully our full-timers are not eating up our entire schedule. So hopefully we have more time available. And then we want to take a look at our part-timers, and we want to fill in the remaining hours, if necessary, if we need them all, with our part-timers. And again, we want to fill in the part-timers based on where we need them the most. What time of the day do we need our part-timers there? Maybe we have someone who leaves at 4 o'clock and we're open until 6:30, so we have to have someone covering the rest of that time. Or maybe we have more going on in the morning and we need more people in the morning. So we want to use our part-timers to fill in that extra time and make sure we have what we need. Okay. Once we got our full-timers in and our part-timers in, again, we want to make sure we fill our employees, factor in the busy times of day. Okay, we don't want too many employees or too few employees during our really busy hours. So again, we want to factor that in, make sure we're building that into our schedule. And also, we don't want people standing around. So we don't want too many people during the times when things get slow. So these are the factors that we've got to consider when we're building our budgets, right? So all of this is very theoretical and it's very hard to get a handle on. So what I want to do is actually spend 20 minutes or so actually going through some real hard numbers with you guys, looking at exactly how to do this. And then we can, maybe you guys can fire some questions at me and we can see where we go from there. So what I've got available for you guys, anybody who's on this, who watches this seminar will have access to what I call a payroll budget calculator. And it basically calculates payroll. It calculates your budget for payroll based on things we were just talking about. So this is what it looks like. And it looks it looks like a lot of stuff and a lot of numbers, and I see it's pretty daunting. But actually, all you have to complete are these white areas. So this is asking for your anticipated sales for the day, for the week, okay? Or actually it's by the day. So I happen to already do the research, so you don't have to do it. So basically, like I said, you go back, you look at your history, you find out what your average sales have been, you project whether they're going to be up or down based on current market, and then you look at them per day. So I have some numbers, so I'm just going to go ahead and put them in here so we can get started with this. All right. So let's see, 2450. Wednesday was 2300, 2150, 2700, 1800, and 1350. Okay. So we just put our sales in for the day that we expect for this week. Now, this shop runs 7 days a week. So one of the next white things is how many days a week are you open? So have to put 7 in. The formulas are built based on how many days you run and what information you put in. So if you miss anything in the white, it's not going to function. Right? So the next thing we have to do is very simply, we put in who our staff is. So we look at our designers, and I've got 4 of them here. So we have Sally, and Sally makes $16 an hour. And then we have Claire, and Claire makes 14. And Susan's a part-timer. She makes $12.50. And then we have Jody. Jody is actually our processor. And so we put her in to design. Processors are considered part of design. Just so you know, for future reference, it's, to me, again, it's part of production labor. If a lot of times we have clients who might have their drivers doing their processing and things like that. So again, you have to factor some of these things in, who's doing what for you, and make sure it goes in the right category. But part of that 15% is your processing. So when we're looking at designers at 15%, that part of that's our processing. Wait, this is set at 15, or it should be 15. Okay, so we put in our 4 designers and their hourly rates, and it carries the rates down here. You notice it duplicated everything down here as I keyed it in. This section is going to show us dollars, and this section is going to build hours for us. So we'll see hours and dollars here when this thing is done. So let me just bear with me while I put the rest of this in, and we'll go from there. So the next thing is the target percentage. Now, if you wanted to be a little bit more aggressive on your target than I am, I'm building this at 15%, but if you wanted it to be 13, you would just change that right here. You could override the percentages and try to be a little leaner if you wanted to. So let's put in some salespeople. Okay, put the salespeople in. I've only got 3 of those. I've got Billy, and Billy makes $12 an hour. And I've got Jennifer at $10.50, and I've got Cindy at $11. Okay. Now, a couple other things this is doing as I'm keying this in. It's counting how many employees we have, and it's calculating the average pay rate. And then it's taking the percentage down here, this 5%, times the sales, and it's creating the average number of hours available based on this pay rate. So as your pay rate goes up, your number of hours are going to come down, and vice versa. So based on what you're paying your people, and and what the 5% is, that creates how many hours you have available. Okay. All right, and let's put our drivers in. We've got Joe. Joe is at $10.50, and we've got Bob. Again, Bob's a part-timer, $8.25, and then Dawn fills in for us too. She's at $9. Okay, so there's all of our people. So let's say that's all of your people that you put in. We've got all the hourly rates in. We've got our estimated pay in. The next thing we want to do is actually go to the schedule. Now, the way this works, it already brought over the names of all of your people, and their hourly rates are already in the system, so it has all of that. So now all we have to do is look at each day. So this is Monday. And this is our designers, our admin people, and our drivers. And then if you go down here, here's Tuesday and Wednesday and so on. So each day is right here. So you just have to put in your numbers for each your schedule for each day. Now, I know it looks daunting, but it's really not that bad. So if we look at this, let's say real quick, let's put in our full-timers, right? That's what we said we got to do is we put in our full-timers first. So if we go to our designers, Sally's a full-timer, and Sally comes in at 9:30. Okay. So she's in at 9:30, and oops, and I'm not doing something right here. I got scroll lock on. How do I do that? All right. So if I go down, I just put a 1 in each of the block that she's here. That indicates that she's here during that time. So right now it's calculated that she's going to be working for 8 hours. So if she comes in at 9:30 and stays until 5, this 5 ends at 5:30. So she goes from 9:30 to 5:30. That's 8 hours. Okay. Now, by entering the 1 in, it's just doing that for a factor, for a calculating factor. Now, Claire is a part-timer, so we'll do her later. And so Claire is a full-timer. Claire comes in a little later because we want to have somebody here all the way till 6:30. So Claire comes in, make sure I got this time right, and that ends at 6:30. Nope. So she comes in an hour later and stays until 6:30. So there's our 2 full-timers. And we'll come back and do the part-timers in a little bit. Right now, if we go over to our salespeople, Billy is our only full-time salesperson, and she comes in the morning and just leaves a little early, same time that Sally leaves. Now, we need someone in the afternoon, but that'll be our part-timers. They'll fill in the rest of the day. And the same with our drivers. Joe is our main driver. He comes in at, I believe, 10:30 or 10, and he stays until close at 6:30, and that's too many hours. He comes in there, 8 hours. Okay, so he comes in at 11. Right. So I think you kind of get the idea of how simple this is. It really is not that difficult. What makes it really valuable is now we got all our full-timers in. Let's put our part-timers in. So we got Susan. So now we know we're going to need more help in the morning. We know mornings are busy, and we're going to need Susan in the morning. So maybe Susan comes in until about noon or until about 1 o'clock. So she comes in for 3.5 hours until about 1 o'clock. And then Jody, we need her help again around the same time. She comes in a little bit later, about the same time that Claire comes in, and she stays just a hair longer. So that gives us, the time that she's in. Now, again, depending on where you need that person, if you need the person down here instead of up here, or maybe in the afternoon there's a rush, whatever goes on in your business, looking at your numbers, you've got to know where these people need to be and at what point and how many hours they need to be. Okay. We need a salesperson in the morning. We open at we need a salesperson in the afternoon. We close at 6:30, so we have to have someone that's here. So we'll bring Jennifer in the afternoon, let her close the day, And then Cindy, if we need anybody else, she can fill in whenever we need her. So maybe we don't need her on a Monday. Maybe it's busier on Friday and we need her on a Friday. Now, Bob and Dawn both take the early runs, and they're part-timers, but they come in a little bit ahead of schedule, a little bit before everybody gets in, and they try to get their runs done by noon. And they do the first or they do each do a morning run before noon, and then Joe picks up in the afternoon and finishes the day. So that's pretty much how you would schedule a day. I mean, that's really all there is to it. Now, what does that do for us? So we have our hours. It tells us our total hours for each one. When you finish the whole week, it will also show you down here how many hours you've scheduled for the week for that person. So you can see very quickly that, hey, did I schedule somebody beyond 40 hours? Do I have overtime involved? And if you do, then you can go back and adjust something and make sure that there's no overtime. Okay. So that's pretty much the way this is designed to work. Now, it carries those numbers back to the front page. So based on the front page now, it says we're using 8 hours for Sally and Claire. We're using 3.5 for each of these. That's a total of 23 hours. Now, based on our average pay rate and our 15%, we have 24 hours available. We just did 23 hours. So we actually have a little bit of time left over if we wanted to use it somewhere else. Or better yet, maybe we can make a little bit more profit. Now, if we said, hey, I really wanted to run this at 13%, it'll change the hours. Notice it went from 24 to 21. So now we only have 21 available, and now we're over by 2 hours or 1.9 hours. So again, if we're trying to run it a little leaner, then we have to make an adjustment to the hours and maybe cut somebody's time just a little bit. But at 15%, what we just did was right on, right? Now, as you do each of the other days, those numbers will all fill in right here. So all the hours will fill in. Same goes with each category. Down here in the sales and admin category, when we put that in, it filled in our hours. Remember, we didn't do anything for Cindy. We said we didn't need her today. But even still, at 5%, we came in at 11.5 hours. We're really over by almost 2 hours in our sales department. And then we finally have our drivers down here, brings over the numbers. We're at 14 hours. Again, we're a little heavy here. So being light in the sales, in the design department is actually helping to pick up for where we might be over in some other categories. And then down the bottom, it gives you an overall actual dollar amount and percentage. So again, we said our target was at 25, but based on the hours that we just selected, the people we're paying, and the sales that we're anticipating, it looks like we're going to hit closer to 27%. Now, one of the other things you can do is after the day's over, you can always come back in here and plug in the actual numbers. And maybe it was 2354, okay? And we plug in the actual numbers, and now we come down and we're at 25.2, so we're pretty much right on target. Of course, if it went the other way, if it had gone down to 2100, then we would see that we're much higher. Now we're at 28.3. Okay. So this does all the work for you of all the calculations of how many hours you're allowed to have and how many you need to do different things. And so that's pretty much the way this thing works. So, I mean, again, you would fill in your other hours, your other days, again, using your full-timers first. Make sure your full-timers don't go beyond 40 hours. Fill in with your part-timers as need be. One other thing on here, if you do have more than 6 designers, this is built to, 7. This is built to handle 7 designers and 7 salespeople and 7 drivers. If you have more than that, you're going to have to contact me and we're going to have to expand the spreadsheet because this is right now is only designed to handle 7 of each category. So if you have more than that, we'll have to make some adjustments for that. So basically, again, the things we got to do is we've got to anticipate our sales, we've got to have our good targets, and then we've got to build our schedule to fit. Now, some businesses are a little bit different in percentages, and I started to allude to that before. Most flower shops will fall within the 15, 5, and 5. But I do have some shops that use less design labor and more sales and support staff. So they have salespeople, for lack of a better word, that might actually go pull flowers and bring them in and drop them, helping the designers be more efficient. And in that case, we might want to change this column to maybe 12% and then change this column to maybe 8. Okay, so you have the flexibility to change this based on the way you operate your business. So it's not locked into stone. The 5, the industry standard is here, but you can adjust this to be whatever you need it to be to make it work best for you. Let's see. So total hours are calculated. So it tells you total hours, tells you total dollars for the week, and percentages. And then, of course, down the bottom, it gives you grand totals so you know what you're dealing with. And I think that's pretty much it for the worksheet. I don't know if you guys have any questions on that while we're on it, or we can get to them at the end. All right. So let's go back to the. All right. Oops, don't save. Yeah, I don't need to save that. Okay. So as far as the, I mean, basically that's really all I've got for you today. I know we're short today. We didn't run all our time. I'm hoping there are a lot of questions because really this to me is more of an active kind of thing. Budgeting is more hands-on, more active. It's not theoretical. So if you guys want to talk, ask some questions, talk to me about maybe how to use that worksheet more specifically. If you want to have questions on how to calculate some of the numbers, whatever it is that you guys might have questions on, that's where I think would be best spent.
All right, thanks, Derrick. I appreciate that. That was a lot of great information. I love that spreadsheet. I'm sure everybody on the webinar loves that as well and is excited to get working with that. Just so everyone knows too, that worksheet is available. It's on ftdi.com right now in the webinar materials section. So that's where you can go to download that and start working with that spreadsheet. So as Derrick said, we're open for questions now. So if anybody has any questions, just type it in the question box. It's on the upper right side of your screen there. We do have a couple of questions. And Alex said, are the target percentages different for each part of the country?
It's really interesting because I know, you go to different places of the country, and like for New York, for example, it's very expensive there. You go to other places, it's not too much expensive. But what I really noticed is that the percentages hold very true all around the country. Because what's happening is even if you're paying more for your labor, you're also selling your product at a higher price. So the percentages hold very, very true. So no, there really aren't any differences between by geographic area or by location. So yeah, thank you for the question, but no, there's not really any difference.
All right, we've got a question from Scott. He didn't see a labor category for manager. Where should they go?
Oh, yeah, good question. Management salaries, if we go back to the spreadsheet, managers generally are a subcategory of administration for us. So we consider, well, I say that, if it's a general manager, we put them under administrative salaries. If it's a delivery manager, we put them under delivery. And if it's a design manager, we put them under design. So depending on what category they're actually spending most of their time in, that's where we're going to put them. But if they're a general manager, then they're going to go in administrative. But otherwise, they're probably going to be either a designer or a driver or whatever their position actually is. So it's going to be based on that.
All right, great. Thank you. Just as a reminder for everybody, if you've got a question, type it in that question box on the upper right side of the screen. It looks like everybody else is still looking at the calculator trying to figure out what questions they want to ask. There's a lot of great stuff in there. And as a reminder for everybody, you can download that on ftdi.com. In the webinar materials section is that calculator. Derrick, why don't we, because it doesn't look like we have any other questions at the moment, why don't we go to throw up that last slide with your email address?
Okay. All right. So one other thing I just want to mention about the spreadsheet is this is kind of the first generation of it. So as you guys are playing with it and working with it, if you've got suggestions, things that you'd like to see added to it or differently, please let me know. I'm trying to make this a useful tool, for the florist and make it useful for you guys. So if there's something that is missing or doesn't have, please let me know so that we can try to make it better and more useful for you.
Great,
and
thank you so much.
You can always reach me right there. My email address is right there. So you can always shoot me an email, ask me questions. And I guess that's all.
Awesome. Thanks so much, Derrick. That was a lot of great information. Like I said, I think everybody needs to download the worksheet and start working with it, and then I'm sure you'll get plenty of emails PDF of the PowerPoint presentation is also there in the webinar materials section too. So if you need to get that, Derrick's email will be there as well. We just want to thank everybody for attending today's webinar. If you missed a portion of the webinar or you want to review it again because there was a lot of great information there, a replay will be available on the FTD Mercury Network Florist YouTube channel later this week. And again, don't forget, go to the webinar materials section on ftdi.com and download that worksheet. As always, we will also be sending you a very brief survey to gather your feedback on today's webinar. So we'd ask you to just please take a minute to complete the survey, help us improve future webinars and other education programs. Let us know how things are going and what other topics you're looking and interested in learning about. And as we turn the calendar to 2019, our next FTD webinar is scheduled for Tuesday, January 22nd. Allison with Bootcamp Digital will teach us how to make sense out of our social media analytics, including how to correlate objectives and results. We will learn how to interpret the data and how to use it to set goals. Registration will be available later this month at ftdi.com, so please be sure to register as soon as possible to reserve your spot. And we just want to thank you again, Derrick, for showing us how to schedule staff to meet our business demands and while achieving our cost targets and turning a good profit. This concludes FTD's webinar, Payroll Scheduling for Profits. Thanks, everyone.